Hey everybody, welcome. Don Strauss here, and today I'm going to talk about Forex trading and risk management. And I'll go over a little bit of basic risk management for manual trading, and then I'll go over how the artificial intelligence and the expert advisor um, handles risk management and what the parameters are and the settings for managing that. So let's get started. Let me share my screen. Okay. Um, the first thing I want to talk about is lot size, and that's really the starting point for risk management when trading forex. There are three main types of lot sizes: the standard lot, the mini lot, and the micro lot. And you can see these numbers here under volume. So if you're setting a 0.01 lot, that's a micro lot. If you're putting an order in for a 0.1 lot, that's a mini lot, and a standard lot is 1.0. So the way you can look at that, as at least as risk managed, as far as risk management goes, is if you place an order for a 0.01 lot on a currency pair, that's 10 cents per pip move. So if the currency pair moves 10 pips in either direction, then that's a $1 move. So if you look at it in the sense of risk management, if you put a stop loss at 10 pips and you purchase a 0.01 lot, then the most you'll lose on that trade, or the most you can lose on that trade, is $1. Now, if you purchased a 0.1 lot and it moves 10 pips, or you put your stop loss at 10 pips, then the most you'll lose is $10. And if you put a standard lot in at a 1.0 lot, then that's $10 per pip move. So a move of 10 pips is $100. So you can lose $100 on that trade if you purchase this one lot. So really the rule of thumb is if you have $1,000 in your account or anything less, this is really the smallest lot size most brokers will take, is a 0.01. So if you have $1,000, then you would put in a 0.01 lot, and you would only risk 10 cents per pip. So if you set your stop loss at 10 pips, then the most you're going to lose from that trade is $1. So if you want to risk 10% of your account at any one given time, then you could have 10 trades open, each at a stop loss of 10, for example, and 0.01 lot size and 10 cents a pip move. So the rule of thumb is 0.01 lot sizes for each $1,000 in your account. And so if you have $2,000 in your account, you can use a 0.02 lot size. If you have a $3,000 in your account, you can use a 0.03 lot size, etc., etc. That's just a rule of thumb to go by. And if you have $10,000 in your account, you can use a 0.1 lot size. If you have $20,000, you can have a 0.2 lot size in your account, and up from there. So I think that's pretty straightforward. And if that way, if you're manual trading, you know going into the trade what your risks are. You set your stop loss at a certain number of pips below where you purchased it, and you know what your lot size is. You know what the most you can lose on that trade is. And so if you know how much you want to risk out of your account, say 10% in any given one time, you know how many trades you could make before you're over leveraged in that sense. Now with the expert advisor and the artificial intelligence trading software, it works a little bit differently. And let me explain that. So let me go to this screen here. I'm just going to share my other screen. Just hold on a sec. Just have to bring up the window. There it is. Okay, now share new screen. There we go. There's the expert advisor settings that are completely customizable, and this is where you can set your risk management and what your tolerances are and what your parameters are when you're trading. They can be custom, custom set for each individual's risk tolerance and account size. So here, as you can see, you can set a starting lot size. Again, same rule of thumb, 0.02 or 0.01 lot size for each $1,000 in your account. And this account has $2,000 in it, so trading 0.02 lot starting size. And the way the expert advisor works is if the artificial intelligence predicts that a certain currency pair is going to go up, in this case it's USD JPY, then it will make a purchase a buy order here at 0.0, in this case 0.02 lot size right here. It'll do a buy order. Now it'll set the take profit around 30 pips up from there, and then if it reaches that level, it closes out and you're in profit. It goes on to the next trade. If it doesn't go in your favor and it goes against you and it starts to turn down, what it will do is it will continue to buy more positions on the way down. So as it's going down, it purchased, let's go with 0.01 lot sizes because it's easier to understand. So 0.01 lot size here made a purchase. The currency pair started to turn down. It'll purchase another currency pair down here somewhere. It'll purchase a 0.02 lot size. If it continues to go down, it'll purchase a 0.03 lot size. Then it'll purchase a 0.04 lot size, and it'll keep going down that way. And what's happening is when the take profit point was originally up here, as soon as it purchases this one down here, it brings that take profit point down a little bit. So now that currency pair doesn't have to turn around and go all the way back up to the original. It only has to go up to this level here. And if it goes up to that level, then it's out of both those trades. If it has to purchase the third position, then it'll bring the take profit down a little bit, and then it'll only have to turn up to here, and it just averages all those positions out into profit. And it'll keep going down and down and down and down. And I'll show you where those settings are. So these are the parameters that is set. Let me just bring that window back open. My computer's a little bit slow here. Maybe it's the windows I have open. There it is. Okay. So again, we have the starting lot size. And then here's all the other risk management parameters. There's the range between levels, 21. That's the amount that it has to move before it makes another purchase. The maximum number of levels it can go down in this setting is 8. Let's go down a little bit more. The range multiplier is the range in between that it moves each time, and then the maximum lot size is 0.12. That's the very maximum size it can make, and the position size is 1.35. So with this math here, what's happening is it's making purchases of 0.01, then 0.02, then 0.03, then 0.04, and it'll go down a maximum of 8 levels here before it turns around. And the way the artificial intelligence works, it works on a history, years of history of trading that currency pair and what it would normally do, and it goes on the concept that when something goes up, it doesn't go up forever, and when something goes down, it doesn't go down forever. So if it's going up, it's eventually going to turn around and come down. And when it's going down, it's eventually going to turn around and come back up again. And nothing's ever going to go up in a straight line, and it's never going to come down in a straight line. If it's going up, it's going to go up, it's going to come down, it's going to go up, it's going to come down, it's going to go up. So a higher high and a lower high and up that way. So it's taking advantage of that, and advantage of eventually it's going to turn around. So really the risk management using the AI software is in these settings here, what your tolerances are, and it's the amount in your account. So you need that leverage or that room for the software to do its thing, that it can come all the way down and go back up again without draining your account. So if you have $1,000 in the account, it's how far it'll go down before it'll turn back up again. So that's where the risk is. So you don't want to trade too many lot sizes or too big of a lot size for your account, because you need that room. And the other way to kind of be more conservative, instead of trading 3 currency pairs at one time, you just need to trade one. You can just trade 1 currency pair at one time. That way you only have a risk of having so many open trades at any given time in your small account, in your $1,000 account. If you're trading 2 currency pairs or 3 currency pairs, then you could have 3 trades, 4 trades, 8 trades open at one time, and then you have more chance of being in drawdown as it is. And you can see this number here, which is an important number, is drawdown. Right now my account is closed. All trades are closed out for the week at 4.37% profit for the week. This is an important number, drawdown. So when the account is running, it gives you a percentage of what is left in your account. So usually a good number is, or a typical number is around 4 or 5% in drawdown, because the EA works in that sense where it's a lot of the time it's in drawdown. So 10%, 11%, 12%, now that's getting big numbers, but that's numbers you want to look at all times. And let's go back to this number. The other very important number on risk management is this equity protector percentage number. So as a default, it's set at 60, which means that your account, if your account reaches 60% drawdown, there's 60% left in your account, it'll automatically close all the trades that are open, and you'll have 60% left of your account. So that's in case something drastically goes wrong, you'll always have 60% of your account left over. So that's another risk management settings. The other thing that is also part of risk management and getting more percentages this trail equity start and trail equity by a certain percentage. So how that works is you make a setting here that your goal for the week is 5% return on all your open positions. So in this case, you can change this to any number you want, 3%, 2%. Right now I have it set at 5%. So what that means, as soon as my account hits 5% for the week, it sets a trigger out, and then it'll trail that by 1%, because this is setting also. So if it hits the 5% trigger, that means that I've got 4% locked in. No matter what happens, when it comes back down to 4%, I'm out, and I've got 4% for the week. But if I hit 5% and then it goes up to 5.5%, then my trail moves up to 4.5%. So now I'm locked into 4.5%. And if it goes up to 6%, then I'm locked in at 5%. So you can take advantage of not having to close out your trades on Wednesday, Thursday, or Friday, which is usually a good strategy. Is you can leave your trades open all the way through Wednesday and Thursday, and then try to have them closed out by Friday, and just try to lock in that percentage. It's an amazing new feature, actually. And that is set right here. Close this window down again. Again, my computer is a little bit slow, probably because I have a video running. Yes, right here. So this is where it tells you what your current goal is. In this case, I had it set to 5%, and it tells you what it is here when it's triggered it. Either it tells you it hasn't triggered it, or it tells you it has triggered it and it's trailing. So it hit the 5%. It was trailing it at 4% because I had a 1% trail, and then eventually it hit the goal and closed it out at 4.37%. So in this case, I grabbed an extra 0.37% above 4%, whereas I would normally close it out at 4%. So I got an extra 0.37% this week, and that's awesome. So, and that's about it. I mean, you can really work with the currency pairs and the number of currency pairs. You can work with your starting lot size, which is the most important thing. 0.01 lot size per $1,000 in your account is a good rule of thumb. Totally up to you, but it's good to work with. If you're only at a small account at around $1,000, you want to be more conservative, you just start trading with one currency pair at a time. That way you have less open trades. If you bump up your account to 2,000, then you could still keep it at 0.01 lots, and then bump up and start trading another currency pair, a second one, and then a third one. And then once your account gets over $3,000, then you can start moving up your lot sizes from there and start moving up from there. So, and basically really a rule of thumb is it's kind of different than manual trading. I think you have to get used to the EA software going into drawdown, because that's how it works. And you have to get used to your account going down before it can go up. So you have to be willing to take that risk, and you have to be willing to have those funds at risk in your account, which is typical with any other kind of investment also. So I hope this clears some things up and it makes sense to you. And send me any questions that you want, and we can go over a few other things next time. Let me know what you want to learn next time, and we'll do this again, okay?